Greetings everyone, welcome aboard. Joseph James, quadruple.com. It's June 14th, 2010. Happy Monday to you. Here's your live trading recap. Had another wonderful day in the room this morning, guys. Boy, it doesn't get any better than this. We trade according to our rules, we use discipline and patience, and we make money every day, right? Nothing difficult about that, right? Guys, before we talk about those trades we took today, guys, there's a link below the video. The link below the video will take you right to our blog. Our blog has articles. Just search for the term speed or two-step, right? Use that search box in the blog. And don't forget, guys, in the upper left-hand corner, there's a button that says share and follow, right? You want to follow us. Use the link below the video, guys. We took 2, 4, 5 total trades. Thursday and Friday last week, we took 1 loss per day, and we still made amazing amounts of money. So we don't need to have a picture perfect day, guys. We can still take losses here and still make some pretty good money. As you can see here, 2, 4, 5 total trades. We took 1 on the S&P today, and you can see the first 4 were on gold. Crude was pretty much non-existent today. The euro was real slow today as well. Now, what was the most important thing that happened today? Well, let's take a look here. Well, first of all, today was a Monday, and Mondays are always expected to be a little bit slower than normal, right? The same reason why you and I don't want to get out of bed on a Monday morning is the same reason why traders don't want to either. Now, today, of course, was OPEX week, though. Remember, the third Friday of every month is OPEX. Now, this was kind of OPEX on steroids, right? Because we had quadruple witching today. Now, what is quadruple witching? Well, first of all, what's OPEX? OPEX is the third Friday of every month, unless the first day of the month is a Friday. So now that means this week is OPEX week. Now throw some more fuel on the fire, and we now have it quadruple witching. In the months of March, June, September, and December, we have 4 different asset classes all expiring. Stock index futures, stock index options on those futures, right? Stock options and single stock futures. Okay, so stock index futures, stock index options on those futures. We then have stock options, right? Single stock options, and then single stock futures. So all 4 of them, 1, 2, 3, 4, will expire the third Friday of March, of June, of September, and of December. Okay, so quadruple witching. Now, this is usually right at the end of the quarters, right? So just look for the end of the quarter, end of the first quarter, second quarter, third, and fourth. Now, we're not going to start seeing any issues with OPEX until Wednesday, right? Monday and Tuesday is usually pretty mild. Wednesday, what you call Wacky Wednesday, Wednesday is when all those traders out there have to now begin to shuffle their portfolio around to get ready for OPEX Friday. Okay, so Wednesday will be when we start seeing signs of this OPEX. So for today's trading, we didn't have to worry about it too badly, except for the simple fact that today was a Monday during OPEX week and during quadruple witching week. Okay, so we will obviously have people that will be treating this as a very tough day, and they'll be staying away from it altogether. So we wanted to start with where? Start with the dollar. The dollar will tell us what to do first this week. Let's take a look here. Now, here was a snapshot of our 34 range chart on the dollar. Now, what would you tell me if I told you this is a sideways market? You would say, no, it's not, right? We're getting lower highs, right? Lower lows. We're seeing a slope to our trigger line here, right? You would tell me the trend is down. But now, what if I hit the control button and the up arrow, right? Tap the up arrow, and I zoom out a little bit on this 34 range chart. What do we see next? We see a much different point of view. And this is the point of view I want you guys to see here. This is where we get that sideways range, right? Triple tops and bottoms, triple tops, right? Inside this sideways range. We had a little bit here from last week. We tried to break above that, but now we're right back into the sideways range here. So we noticed right away the dollar this morning. Remember, use a slow time frame and then step back a little bit and see what the slow time frame tells us. Because we can see here, double tops, double bottoms, right? It's a very clear sideways range. Now, you wouldn't have seen that if all you looked at here was the faster version of that, right? You wouldn't have seen that if you saw this. When we zoom out, though, that's when we begin to see just how easy it is to see this sideways market. Now, the dollar tells us here, be very careful now, because with the dollar going sideways, we think the rest of these markets will also go sideways. Okay, so that was the first heads up this morning. We had something to worry about. We then went over to our slower time frames. Now, this is a 30-minute chart on crude. And we noticed on crude today this is something you guys really understand here, is that notice how crude comes down, and while the price is dropping, we had volume rising. Then we see this period of sideways chop here, right? Sideways chop. And we see what? We see the volume is lower, right? Lower volume. Well, then what we saw here was last week, right? Last week we began to rise, okay, off those lows. And we had, right, good volume, higher volume here. But then all of a sudden, we see this, right? What does that tell us right there? Specifically though, what does it tell us compared to the previous days of volume, right? Much lower. Okay, so we're getting lower volume now as we begin to move to the upside on crude. Now this is a very slow time frame. Okay, very slow time frame. We're looking at multiple days and weeks at a time. Decreasing volume means we're probably going to end up coming right back down and retesting these lows. So be on the lookout over the next couple of days here. We'll probably see crude oil drop to 68. Now, if it doesn't, look for this thing to really make a run up, okay? Because the fundamentals right now with this lower volume down here, right, that tells me fewer and fewer people are pushing this thing up now, which means we're probably going to start seeing this crude oil start to trickle down. Okay, we'll keep a close eye on this, but look for that this week, guys, here on the crude. When we see stuff like this, right now, let's go take a look at some trades we took today. Because we took 5 total trades today. We had 1 stop in there. The first trade here today was on gold. First trade on gold, we're coming down, break below the swing, this support level here. Right, you got 27 even is our support, 27 on the support. We break below that level, mark up our swing low, and there's your break below that swing low for your entry at 26.5. We took 2 off at 4, 1 off at 8, 1 off at 1, 17 ticks or 170 USD for a breaker pattern short. Now, one thing we noticed right away was we didn't see any follow through, which meant that after we saw this trade work out, it quickly exhausted, reversed, and tried to go back to the upside. Now, we're going to see this lack of follow-through all morning this morning when we talk about our trades today, but this was a confirmation we saw. When the dollar tells us sideways, we see low volume, and then we see lack of follow-through. This lack of follow-through tells us that we may not get very many big winning trades today. So because of that, we need to be careful with the money we have in our pocket, right? Got to protect our capital first. There was our first trade at 10 o'clock, brings us 170 USD in the market, and we noticed right away we didn't get any follow-through. Next up, right? Next up, this trade was a loss at 10.17, right? We just finished the breaker pattern short up top here. We come down, we bounce off the low of day. We mark up our swing high. We look for a bounce above that swing high, right, for a reversal going to the upside here. But notice we have this darn trend line in our way. Now, we knew this was going to be higher risk. We wanted to make sure we got above the trend line, but we had big buyers that looked like they were going to do the trick. When we took this thing long, we saw tons of buyers. We thought they would break the trend line. They didn't, and when we noticed the trend line was going to hold, we quickly flattened our position. We lost 2 ticks times 4 contracts is 8 ticks there, so 80 USD. So I lost 80 bucks there, made 170 in the first trade, lost 80 here at 10.17 on a 2-step pattern long. Again, bouncing off the low of day here. So we win some, we lose some, but at this point now we're starting to realize, okay, remember, we're in a very difficult market environment today. Time to play with our rules here. Let's not go against our rules anymore. That trend line, of course,